What's up, guys? So in this video I'm going to be going over how I master trend using supply and demand, also going over a trade breakdown I did making about $800. You can see right here on Adobe and ES and MES futures. So I'm going to break down all of that, how I use trend, supply and demand, and all of that to make money today. So let's go ahead and dive right into it. So we're going to look at SPX first. Because I traded SPY and I traded ES futures as well, but I do it based off the SPY chart. So I'm just going to break down kind of how I look at trend, how I use it to my advantage in the stock market. So looking at SPX, we can see that over the past few days, right, we have a demand zone here and we have supply zone up here, and price ended up breaking this demand. And when price ended up breaking demand, we start to understand that we are now in a downtrend, right? Downtrends happen when price is making lower lows and lower highs. And in a downtrend, you're going to see that demand breaks and supply holds, okay? Very simple and very easy to understand, right? So over the past few days, we've been in a very clear downtrend, right? I can see here, price has been making a low, then we go up, low, low, up, low, up, low, up, etc., right? We're making lower lows and lower highs, right? Now, the key thing here to mention is you need to understand who's in control when trading, right? Is it the buyers or the sellers? And the way to understand that is to figure out what is breaking. Is demand breaking or supply breaking, right? So let me show you here. In this case here, right, we have a demand zone here. Not a great one, but we end up gapping down. End up gapping down and break through it, right? And we have a supply zone form here. Price then rises up, forms demand down here, right? We fail to break above this supply, come back down, we break demand. Okay, once we break this low, we know that this high should hold, right? Because sellers are in control at this high. This high was able to take out this demand zone here. So these sellers are in control. So what happens? Price comes back up to the supply, just like this, and we had a huge gap down, right? Huge gap down, break this low again, break demand, and we know that sellers are now in control, right? So what we can do is zoom this in on a smaller time frame and show you the exact trade I did, as well as how I use supply and demand to find my entries, my exits, and know that the bears are going to be in control for that trade. So let's go ahead and look at SPY. So I had a few different levels coming into the market, showing the plan I did on SPY. So in the morning, I put in my morning group, basically said value area rotational trade. These were the levels I put in the group. And if we look at the SPY chart, the levels are the same exact thing here. They ended up working out very, very well, right? Now, let me go ahead and explain kind of what I was thinking coming into the market open. I said, okay, we have this low here. Price is gapping down below yesterday's low. If we're able to get back above this VAL level, which stands for value area low, I'm going to expect to move up to this POC and then VAH level, stands for value area high. Now, price never even got up to that VAL level. And so what I noticed happened is right off the bat, price comes up, we reject yesterday's low, and we end up coming straight down back below this level. Now I'm zooming on the 1 minute chart here. Now, keep in mind, I was also looking at ES futures at the time. So let me go ahead and look at ES and show this here, this breakdown here, right? So ES, this huge green zone here is a daily demand that I had, and I was expecting price to come down to that and bounce from it. So you can see here, we have this huge daily demand zone, the 1 hour demand zone inside of it that drew in there, but I was essentially looking for price to come down here to look for longs. Now, obviously, price is in a downtrend, right? So I'm looking for a short setup. So let me zoom in here on the 1 minute, show you what I was watching. So looking here at the 1 minute, market opens right around here, right on this candle here. And what happened, right? We have continuous lower lows and lower highs, right? We have this supply zone up here that we end up rejecting. We have this low here that breaks. We have this low here that breaks. And we have a very obvious downtrend, right? There's no reason to be bullish, right? Until price is able to get above this supply and most likely this supply as well, right? Once we're able to see that buyers are able to get above a supply zone, take out a supply zone, that's when we know that buyers are in control and we can start looking for longs. But this never happened, right? So at open, we get the manipulation, right? 9:30, price opens right here, and what happens? We see that price ends up breaking this high. This is liquidity right here. So what happens is a lot of retail traders use this as their stop, right? They're in short, maybe here, they're putting their stops right above this level. And market makers and institutions see that as a chance where they can get filled short. That's exactly what happened here. Price comes up, we take the liquidity, we stop out the retail traders, we hit supply. Keep in mind, we're still in a downtrend. And then price just soars all the way straight down, right? And at this point, this is when we can confirm that we're actually in a downtrend, right? Obviously, we've been in a downtrend, the past few days, coming into pre-market as well. But we end up breaking this high. We take the liquidity. We failed to get above this supply. And then here's the key here. Here's how I knew that we were actually going to sell off and go into a lower low, right? If we look at this demand zone here, price forms demand on a very, very small time frame. You can see price is starting to make higher lows and higher highs, right? Low here, high, low here, high. Now, right here, you can see that price actually breaks this low here, right? We break back below this demand zone. And once I saw that, I knew shorts were now still in control. So price breaks that demand, sellers are in control. We end up breaking this low as well. We come all the way down to the 3954 area. Now, when price went back to this 3954 area, I knew shorts were in control, and I wanted to look for a short setup because I knew, I want to look for a pullback, get a good risk-reward trade, and target down at this demand zone. So what did I do? Where did I get in my entry for my short? Well, I saw that we have this 1 minute supply zone right here, right? You can see price comes down, we stall for a minute, and we have a fast move lower, like a very fast move lower as soon as that 1 minute candle is done, right? This supply was not only able to take out this demand, but form a very strong supply, base drop supply zone right here. So that was going to be my entry, right? Now, where did I put my stop? I ended up putting my stop right above this high here. Now, typically, I'd want to put my stop above this high here because this was the high that was able to take out this demand, right? This is where sellers are going to defend this pivot high here, right? So why did I not put my stop over there? Well, because the way I didn't do that is because price always goes towards liquidity. Price always goes towards highs and lows, right? Highs and lows, just liquidity. Right here, see? Price went up to that high, took it out, and then reversed down to this low. And so I knew price formed this low down here, actually a little bit lower, this wick right here. And so I figured, okay, if my first target is going to be this low, I need to have a good risk reward. And so if I'm getting in short, right here at the supply, and I'm risking all the way above that high, and then targeting down at that low, it's not even a one-to-one risk reward trade. So when I saw that, I said, okay, I don't really want to take this trade. Obviously, I can hold some runners down to this demand, but I want to be able to take profit at that first liquidity low because I know this is going to be where a ton of retail traders have their stops, and I want to make sure that I can take profit when that happens. So what I did is I put my stop right above this high here. And the reason I did that is because you can see we have another 1 minute supply zone right above here. So I figured, okay, if price is able to take out both of these supply zones, the likelihood of it taking out this high increases, and I just don't want to be in the trade anymore. I can always get back into the trade. If it ends up reversing, coming back down, I can find a new entry. So it's not a big deal to me. So I put my stop right above there. Oops. Let me bring this back. Stop right above there. First target is now, if I put it down at that low, a 1.5 hour trade, right? Very, very solid trade, right? It's 11 points on the ES futures market, and that's the exact trade I did, right? So what I did is here, I got in short on ES and MES. I do that so I can scale out of multiple contracts. So I got in ES contract, sold it right here at this liquidity low. Ended up taking profit and partials on the MES trades as we come down here because that was my next level on SPY, right? So I look at ES, I look at SPY as well. Going back to this trade, this 1 minute supply zone that we were just talking about on ES also coincides with this level here, right? So these are institutional levels that I trade off of. They're very good for scalping, very good for understanding direction. And so I saw that confluence with that supply zone. I knew it was a good entry. I got in, took out the partials. You can see we actually hit the low of day, 393.69 on SPY, got out majority of my MES contracts, and then ended up getting stopped out the rest break even as we ended up coming back above, right? And you can see what happened as soon as price was able to get back above this supply zone. What did that tell me? It showed me that buyers are now in control, and this low should be able to hold. What happened is price came down, hit demand, ended up breaking another high, right? So that gave me a lot of confirmation understanding, what the trend is, who is in control. All you need to do is look at which supply demand zone is being taken out. Is demand consistently being taken out, or is supply being consistently taken out? And if demand is being taken out, which it was in this scenario here, where is it? Right down here. Yes, this demand was taken out, right? This low was taken out here as well. Price is continually making lower lows. That's when I know to get short. And as soon as I saw that, price finally started breaking supply, right? This demand was able to take out this supply, able to take out this supply, and this supply as well. That's when I could have switched longs and looked to take a bullish position. But at the end of the day, I was already up about $800, so I was already done. I also had a scalp on Adobe using my levels as well. But we can go over that in a different trade recap. But overall, I hope this video helped you understand a little bit more of how I trade, using supply demand, using trend, really understanding who's in control of the market. It's going to get you a lot more upside and get you a lot more wins in your trading. So hope you guys enjoyed this video. If you did, please subscribe, leave a like on it as well, and then also comment other videos you want me to make. I can go ahead and do that for you. Also, feel free to follow my Twitter. I've been 8 out of 9 green days the past 2 weeks. I've been very, very consistent lately. And yeah, I share a lot of cool information on my Twitter as well. So if you guys enjoyed this video, again, comment other videos you want me to make. I'll go ahead and do that for you. And I'll see you guys in the next video.